A month ago, Elon Musk was the world's first trillionaire. Today, that title is gone after $500 billion disappeared in just 30 days. No scandal, no lawsuit, no stock sale. Keep watching as we break down where that money came from and how it vanished so fast. Let's start with the moment everything changed. On June 12, 2026, SpaceX went public. It was the IPO Wall Street had been waiting years for, and it did not disappoint. The company disclosed it aimed to sell about 555.6 million shares at $135 per share, raising $75 billion in its initial public offering and potentially valuing the company at a record $1.77 trillion. That single event pushed Musk over a threshold no human had ever crossed. 4 days after the listing, on June 16, the stock did something nobody expected. It surged. The rocket manufacturer's stock surged by an additional 40%, bringing his net worth to an all-time high of $1.45 trillion. For a few hours, Elon Musk was worth more than Google's two founders combined, more than Jeff Bezos, more than anyone in recorded history. He wasn't just rich, he was in a category by himself. Then it turned. The stock dropped 3.8%, closing in on the $135 price at which it went public a month ago. It has now fallen more than 38% from the all-time high above $225. It touched the day after listing and has declined in 11 of its 17 trading sessions. 11 losing sessions out of 17. That's not a bad week. That's a stock that can't find a floor. By the numbers, here's what a month looks like. On June 16, 2026, Elon Musk had a net worth of $1.32 trillion. Fast forward 1 month, and Musk's net worth is at $832 billion, according to the Bloomberg Billionaires Index. Different trackers put the peak and the low at slightly different points, but they all tell the same story. The billionaire's wealth fell to $879.3 billion after another sell-off in the newly public SpaceX stock. After shares extended a brutal run lower, slipping 3.8% to just under $140, and moving closer to the company's $135 listing price. The stock has now fallen more than 38% from its all-time high above $225 reached the day after listing. Forbes tracked it too, and their numbers land in almost the same place. Forbes valued Musk at $1.45 trillion on 16 June, when SpaceX shares peaked at $225.64, and briefly made him the first person on record worth more than $1 trillion. By Thursday evening, the same tracker put him at $838.1 billion. Whichever index you trust, the drop is somewhere between $500 billion and $612 billion, depending on which day you start counting from. Elon Musk's fortune has fallen by roughly $612 billion since 16 June, a month in which the value attached to his name shrank by more than Jeff Bezos and Larry Page have built between them across 5 decades of Amazon and Google. Let that sit for a second. 2 of the richest men on Earth, building fortunes for 50 years each, and Musk lost more than both of those fortunes combined in 1 month. The richest man in history lost more than the 4th and 2nd richest have ever earned, sold not a single share, and remains richer than anyone alive by a margin of roughly $548 billion. He didn't sell, he didn't do anything, really. The stock just moved. So why does a stock price swing turn into a $500 billion personal loss? Because of how concentrated Musk's wealth actually is. This isn't a diversified portfolio sitting across 100 companies. It's almost entirely one bet. Musk's own exposure explains why the numbers move so violently. According to reports, he owns about 4.76 billion SpaceX shares and 350,000 exercisable options, while his fortune is still heavily tied to Tesla as well. Break that down and the math gets almost cartoonish. The arithmetic is brutally simple because his fortune now rests on one asset. Musk holds about 4.8 billion SpaceX shares, roughly 42% of the company. So every dollar the share price moves shifts his wealth by around $4.8 billion. Every single dollar. not every $10. Every $1 move in SpaceX stock moves Musk's personal fortune by close to $5 billion. When a stock like that drops $85 in a month, you get a $500 billion hole. Now, before you picture Musk standing at a bank counter watching his balance drain, understand what this money actually is. The money was never in his pocket. It was in everyone's imagination, which is where a great deal of the AI boom still sits. Nobody handed that money to anyone else. It existed as a number on a screen, and the screen changed. That's the strange nature of billionaire wealth in 2026. It's not cash sitting in a vault, it's a valuation multiplied by a share count, and both of those can move violently in a single afternoon. The slide didn't happen in one dramatic crash either. It came in waves, session after session, each one chipping away a little more. On one Monday alone, the South African-born billionaire's net worth fell below $900 billion, landing at $879.3 billion after another slide in SpaceX shares. Stripped $37.9 billion from his fortune in a single session, almost $38 billion gone before lunch. And that was just one of many similar days across the month. This is the story everyone's been watching unfold in real time. The fastest rise to trillionaire status in history, followed by the fastest retreat from it. And to understand why it happened, you have to go back to what actually built that $1.4 trillion number in the first place, and what's been quietly pulling at the foundation underneath it. To understand the fall, you need to understand the rise, because they're the same story told twice. SpaceX had been private for over 2 decades. Musk founded it back in 2002, and for years it operated outside public markets, raising money through private funding rounds instead of a stock exchange. Founded by Musk in 2002, SpaceX has grown into the world's largest space company and a dominant force in commercial launch services. The company pioneered reusable rocket technology, helping lower launch costs and reshape the economics of the space industry. It has also become a key contractor for NASA and the US government through civil and national security missions. By 2026, SpaceX wasn't just a rocket company anymore. Its real engine, the thing investors actually cared about, was Starlink. What underpins the valuation is Starlink. The satellite internet business generates the bulk of SpaceX's revenue, which reached $18.67 billion last year, and it serves 164 countries. Whether the company can grow into a multi-trillion-dollar valuation depends almost entirely on how many more subscribers those satellites can reach and how cheaply Starship can put them in orbit. That's the pitch that got Wall Street excited enough to price the IPO the way it did. And going public didn't just raise money. It raised a number that was jaw-dropping from the start. Market capitalization slid from $2.69 trillion to $1.64 trillion. More than $1 trillion of value gone since mid-June. SpaceX raised a record $86 billion in its June IPO, the listing that made Musk the world's first trillionaire. Before it slid, the company had briefly touched a valuation higher than almost anything else on the planet. Space Exploration Technologies Corp. was already among the world's most valuable companies, briefly surpassing Amazon in the days following its market float when it soared to a valuation of $2.78 trillion. Not everyone believed the number was real, even before the stock turned. Some of the loudest voices on Wall Street were skeptical from day one. Michael Burry, the investor famous for calling the 2008 housing crash, said flatly there was nothing in SpaceX's IPO filing to suggest the company is worth $1 trillion, let alone $2 trillion. Morningstar went even further in the other direction, projecting SpaceX would trade far below its offering price and warning traders to sit out the volatility until things settled. But for a few days, the bulls were right, and the bears looked foolish. The stock soared 20% on its first day of trading and shot up even further 4 days later. The stock lost 16.43% yesterday, a sell-off of approximately $400 billion. Its market cap currently sits at $2.03 trillion, That was actually one of the early down days. Even the drops were happening from a starting point most companies never reach in their entire existence. Here's where it gets messy though, because the fall wasn't just about SpaceX losing altitude. It was compounded by something happening on Musk's other side of the ledger entirely, Tesla. Tesla's stock had already been sliding before SpaceX even went public. Tesla's shares, which hit a recent peak of $453.4 on May 13, have dropped by nearly 16% as of Wednesday's closing price of $381.59, which marked the seventh decline for the stock over the previous 9 sessions. That nearly month-long slide for Tesla has reduced Musk's net worth by about $51.5 billion. That was weeks before the trillionaire headline even happened. Tesla was already bleeding quietly underneath the SpaceX excitement. Then came a legal wrinkle that made things worse. Forbes made a decision that stripped a huge chunk of paper wealth straight off Musk's balance sheet overnight. Musk, who has held the world's richest person title since May 2024, lost his trillionaire status last week after Forbes removed $116 billion of Musk's restricted Tesla stock from estimates of his net worth. That came after Tesla replaced Musk's 2018 CEO Performance Award with a new one that pays out only if Musk remains in a senior leadership role through January 2028. So it wasn't just the market turning on him, it was the accounting rules catching up too. Forbes removed the $116 billion of restricted Tesla stock, representing an 8% stake in the company. From calculation of Musk's fortune to be consistent with how they treat other billionaires' unvested restricted stock. That single adjustment on top of the stock slide is part of why the trillionaire title didn't just wobble, it actually broke. And once it broke, the headlines came fast. Elon Musk became the first trillionaire in world history when SpaceX went public on June 12, boosting his fortune to an estimated $1.1 trillion. Then, as the rocket maker's stock soared by 40% to its all-time high during the trading day on June 16, Musk's net worth briefly peaked at a record $1.45 trillion before SpaceX's stock sank by 31% through Tuesday. Thanks to that slump and new restrictions on $116 billion of Musk's Tesla stock, the world's richest person is no longer a trillionaire. He's worth an estimated $962 billion. Less than 2 weeks after making history, he'd already lost the label. That's the part that stunned people, not that the drop happened, but how fast it happened after the peak. Days, not months. And this is where the story stops being about one number and starts being about how fragile that kind of wealth actually is when it's built almost entirely on stock in 2 companies, both of which can turn on a headline, an earnings report, or a shift in investor mood. Now, let's get into why this kept happening, session after session, because it wasn't a single crash. It was death by 1,000 cuts, and each cut had its own cause. The first big single-day hit came fast, and it wasn't small. On June 22, the stock dropped 16%, wiping about $240 billion from Musk's fortune. Tesla shares fell nearly 6% the next day, adding to the loss. $240 billion gone in one session. That's the kind of number that would end most companies. And it happened to one man's fortune in a single afternoon. Fortune magazine ran the comparison, and it puts the scale in perspective better than any raw number can. The eye-watering figure is roughly the market cap of global technology company IBM, according to data from Trading Economics. IBM reported it employed approximately 270,000 people in 2024. One company, 270,000 employees. Musk lost the equivalent of that entire company's value in a single trading session, and he still went to work the next day like nothing happened. The drops didn't stop there. They kept coming in smaller, grinding waves. Shares of SpaceX dropped 6.2%, a reversal from the nearly 12% jump over the 3 previous trading sessions. Another decrease in SpaceX's share price cut Musk's net worth by $59 billion, up 12%, then down 6%. That kind of whiplash became the pattern for the whole month, brief rallies swallowed by bigger retreats. At one point, there was actually a rebound that made headlines of its own. Elon Musk reclaims trillionaire status after making a mind-boggling $62 billion in a single day. For a moment, it looked like the bleeding had stopped. It hadn't. The stock kept sliding after that bounce. And by the time the dust settled weeks later, all of that recovered ground, and then some had been erased again. Why does SpaceX stock swing this hard in the first place? Because unlike Tesla, this is a company the market has almost no history pricing. It only started trading a month ago. There's no years-long chart to smooth out sentiment, no earnings track record on the public markets to anchor expectations. Every data point, every rumor, every analyst note carries outsized weight because traders are still figuring out what this company is actually worth, and the analysts themselves can't agree, which tells you everything about how unsettled the valuation really is. On one side, you've got serious bulls. Raymond James has an $800 price target on SpaceX, a number that implies a market value well above $10 trillion. Analyst Brian Giswale argued the company is building the foundational platform for the next generation of industrial capacity. Dan Ives at Wedbush is right there with him, calling the company one of the most differentiated assets in the entire tech market, and arguing its position to become a major hyperscaler across connectivity, launches, and AI infrastructure. But look at the spread between those bullish targets, and you'll see just how much disagreement is baked into this stock. Arete Research sits at $401, Morgan Stanley at $300, Goldman Sachs at $205. The average broker target is $236, roughly 70% above where the stock trades. Even the bulls can't land within $500 a share of each other. When your most sophisticated analysts are that far apart, of course the stock is going to whip around every time a new headline drops. There's also a structural piece to this that matters for understanding what Musk actually lost and what he didn't. Even as the stock cratered, his grip on the company never loosened. Musk retains more than 80% of SpaceX's voting power through a dual-class structure, which means the sell-off costs him money but not control. He can lose $500 billion in paper wealth and still run the company exactly the way he wants to the next morning. That's an important distinction. This wasn't a hostile boardroom fight or an ousting. It was a market repricing an asset while the man who built it kept the keys. Underneath all this, there's also the bigger question hanging over the entire tech sector, and it's not really about SpaceX specifically. The drop came after shares of SpaceX and Tesla fell during a broader tech sell-off. Investors have become more cautious about the long-term profitability of artificial intelligence. This is the same nervousness rattling Meta, rattling the AI trade broadly. SpaceX just happens to be the biggest single target because Musk's wealth is so concentrated in it that every tremor becomes an earthquake in his personal balance sheet. And there's an actual test on the calendar that ties all of this together. The moment where the bull case either gets proof or gets another blow. That question gets tested when SpaceX plans to launch the 13th Starship test flight from Starbase in Texas, carrying 20 next-generation Starlink satellites. The first time the vehicle has flown with a paying payload. The satellites will attempt to connect with ground stations in South Africa using laser links in the country where Musk was born, and where Starlink still cannot legally sell service because it will not meet a 30% black ownership requirement. That's the strange irony sitting quietly underneath this whole month. The technology that's supposed to justify a multi-trillion-dollar valuation is being tested by beaming signals toward the one country where Musk was born, and where his own company still can't legally operate. So the mechanics are clear. Concentrated ownership, a brand new stock with no pricing history, analysts miles apart on what it's worth, a broader AI market getting jumpy, and a legal reclassification of $116 billion in Tesla stock, landing at almost the exact same moment as the SpaceX slide. Stack all of that together, and you get a month where $500 billion simply stopped existing. A drop this size, from a person this visible, was never going to happen quietly. The internet noticed immediately, and the reaction split into a few distinct camps. There was the camp that leaned into pure disbelief at the scale of it. Financial writers kept reaching for bigger and bigger comparisons to make the number land. One outlet framed it by pointing out Musk's fortune, even after the crash, still dwarfed his closest rivals combined. By Thursday evening, the same tracker put him at $838.1 billion, still comfortably the richest man alive, ahead of Page at $290.3 billion. Sergey Brin at $267.8 billion, and Bezos at $258.9 billion. Add the last two together, and the total, $549 billion, still falls short of what Musk's paper wealth shed in a month. That comparison went everywhere. The idea that Musk lost more than two of the richest men on the planet have ever accumulated became the shorthand everyone used to explain the month. Then there was the camp mocking the very premise of the loss, pointing out that losing $500 billion and still being worth nearly $1 trillion isn't exactly a hardship. One widely shared headline captured that mood directly, framing Musk's tumble as him becoming a billionaire like everyone else again, as his fortune dropped below $900 billion. It's the kind of headline built for the internet's appetite for irony. A man losing more money than most countries generate in GDP, and still landing comfortably in first place on the world's richest list. There was mockery aimed more directly at him personally, too. Musk's own contradictions became part of the story, especially given his history of criticizing other billionaires' spending habits and philanthropic choices, while sitting on a fortune of his own. One recurring jab that circulated widely essentially asked why. If he's so critical of how others use their money, he's got so much of it in the first place. A line that got repeated across social platforms once the trillionaire title slipped away. Meanwhile, a separate storyline was unfolding around Musk's public conduct. That added fuel to the reaction. During the same stretch that his fortune was sliding, Musk was also in a public back and forth over New York City politics, accusing the city's mayor of handing out government money improperly, which drew its own wave of pushback online, with critics labeling him a hypocrite given his own company's reliance on federal contracts. Around the same time, he was trading public jabs with Sam Altman, accusing OpenAI's chief of borrowing Apple's phone technology concepts, a feud that kept Musk in headlines, even as the SpaceX numbers kept sliding beneath him. There was also a quieter, more analytical reaction from the finance world. Less about mockery and more about what this meant for how we think about wealth measurement in general. Commentators pointed out that this entire episode was really a lesson in how fragile net worth is as a concept, once it's built on a single, newly public, thinly traded stock. As one report framed it, the entire swing demonstrated how quickly fortunes tied to technology valuations can change, with a drop from roughly $1.45 trillion to under $1 trillion inside a month, reflecting broader market adjustments rather than anything Musk personally did wrong or right. Not everyone was writing him off either. Even in the middle of the slide, some of Wall Street's most followed voices were doubling down rather than backing away. Ives at Wedbush kept his bullish rating in place throughout the entire drop, and Raymond James actually initiated coverage with one of the highest price targets on the street, implying the stock still had room to more than triple from where it was trading. So even as headlines screamed about the losses, the professional money on Wall Street was, for the most part, still buying the long-term story. That split mockery from the internet, skepticism from some analysts, unwavering bullishness from others, is really the emotional shape of this entire month. Nobody was neutral about it. Everyone had an opinion on whether this was a temporary correction in a stock still finding its footing, or the first crack in a valuation that was always going to come back to earth eventually. And that brings us to where things actually stand now, because the number everyone's been quoting, that $500 billion loss, isn't the end of the story. It's a snapshot of a fortune that's still moving, still concentrated in the same two stocks, and still capable of swinging by tens of billions before lunch on any given Monday. Musk is still, by an enormous margin, the richest person who has ever lived. That part hasn't changed. What's changed is the shape of the risk sitting underneath that fortune, and that's really what this whole month exposed. The most recent snapshot puts him just under $900 billion. Elon Musk is the wealthiest person in the world, with an estimated net worth of US $913 billion, according to the Bloomberg Billionaires Index, and $917 billion according to Forbes, primarily from his ownership stakes of 42% of SpaceX and 20% of Tesla. Still nearly $1 trillion. Still first place, and not close. Larry Page ranks second at $290.1 billion. Sergey Brin third at $267.6 billion. Musk is worth more than both combined twice over, even after the rout. But the trillionaire title is gone, and getting it back isn't guaranteed. There's a real path back, though, and it runs through the exact same volatility that took it away. Given the enormous size of Musk's SpaceX holdings, a small rebound in the rocket maker's stock price could easily make him a trillionaire once again. That's the nature of concentrated wealth. The same mechanism that wiped out $500 billion can hand it right back with a good enough quarter. There's also a much bigger number sitting in the background that nobody's touched yet, and it's part of why nobody on Wall Street is writing Musk off despite the crash. Not included in Forbes' estimate of Musk's net worth are huge sets of performance-based restricted shares that could boost his stakes in SpaceX and Tesla to as much as 47% and 29%, respectively, before taxes and the cost of unlocking the restricted shares. To earn all that stock, Musk will have to achieve lofty goals, like growing SpaceX and Tesla's market caps to $7.5 trillion and $8.5 trillion, respectively, and establishing a permanent human colony on Mars with at least 1 million inhabitants. Read that again. 1 million inhabitants on Mars. That's literally one of the conditions attached to unlocking the next tranche of wealth. It sounds like something out of a novel, but it's sitting in an actual compensation filing. He will receive additional SpaceX stock and $1 trillion worth of Tesla stock if the companies meet certain milestones. An additional $1 trillion, contingent on goals so ambitious most people would call them fantasy. That's the scale of what's still on the table, even after losing half of what he already had. None of that changes the fact that the last 30 days were rough by any measure. The stock that made him history's first trillionaire spent most of its first 2 months as a public company sliding, not climbing. The stock has declined in 11 of its 17 trading sessions. A reminder that even the market's loudest hype machine can cool fast. That line captures the month better than any single dollar figure does. The hype that created a trillionaire in days needed only weeks to take a big chunk of it back. What happens next depends entirely on things nobody can fully predict yet. Whether Starship's next flights prove out the Starlink expansion the bulls are counting on, whether Tesla's autonomous driving and robotics bets start paying off the way JP Morgan and others are betting they will, and whether the broader nervousness around AI valuations settles down or gets worse. Every one of those threads is still live. None of them are resolved. What is resolved is the number everyone clicked on this video to understand. In 30 days, roughly $500 billion in paper wealth tied to Elon Musk's name simply stopped existing. Not because he sold anything, not because a court ordered it, but because 2 stocks he holds enormous stakes in went through a rough month at the exact same time. His restricted compensation got reclassified. He woke up one morning in June the richest human being to ever exist. A month later, he woke up nearly $500 billion lighter, still the richest man alive, still holding the keys to both companies, and still just one good earnings report away from getting every dollar of it back. IB Times UK, Elon Musk just lost $500 billion in 30 days. IB Times UK. Elon Musk net worth falls $612 billion in 31 days, more than Jeff Bezos and Larry Page have made combined. Benzinga, Musk loses $500 billion in a month as SpaceX sinks. Fox Business, Elon Musk loses trillionaire status. After tech sell-off erases billions from Fortune. MEX News. Elon Musk's net worth falls by more than $500 billion. Wikipedia. Wealth of Elon Musk. Billionaires Africa. Musk's fortune drops below $900 billion. Elon Musk is a billionaire like everyone else. Again, as fortune drops below $900 billion. Jerusalem Post. Elon Musk is no longer a trillionaire. Forbes. Elon Musk loses trillionaire. Status as SpaceX slide cuts net worth by $50 billion. Forbes. Elon Musk's net worth drops $50 billion amid Tesla rout. As trillionaire status nears, Forbes. Musk's net worth drops below $900 billion as SpaceX slide worsens. Forbes. Elon Musk just lost his trillionaire status. Yahoo Finance. Musk's net worth rises $16 billion as SpaceX heads toward IPO. Fortune. SpaceX's drop-off sees Elon Musk's net worth fall $240 billion.